Unlock the secrets of Warren Buffett's investment strategy. Imagine this. You're 30 years old, you've just made your first real investment, and in the next 5 years, it grows by over 500%. Sounds impossible? Well, what if I told you there's a man who's done it again and again? And he's not just any investor. He's Warren Buffett, the Oracle of Omaha. And today, I'm about to share how you can start picking stocks just like him. Yes, you. You could be the next big success story. But first, let me ask you this. What if the key to your financial freedom is hidden in plain sight, and you've been overlooking it all along? Stick with me for the next 10 minutes, and you'll not only learn how to pick stocks like Buffett, but why you're probably missing the mark in your investments right now. Point 1. Understand the value of a business, not just the stock price. Warren Buffett doesn't buy stocks, he buys businesses. Let that sink in for a second. If you're only looking at the stock price and chasing trends, you're playing a dangerous game. In Buffett's world, the value of a company is what matters. It's intrinsic worth. And the stock price is just a reflection of that value in the market's eyes. Think about it. If you're shopping for a new car, do you pick the one that just looks shiny or the one that's reliable, well-built, and will serve you for years? Stocks are the same way. Focus on companies with solid fundamentals. The earnings, the balance sheet, the leadership, these are the real metrics. Seriously, we all know that feeling when you buy something just because it looks cool and then regret it later. Don't let your stock picks be that impulse buy. Buffett once said, "Price is what you pay, value is what you get." Focus on businesses you believe in long term. And if you're not willing to hold it for 10 years, don't buy it at all. Point 2. Be patient and think long term. Here's the truth that will either excite you or terrify you. Investing isn't a get-rich-quick scheme. Yes, you heard me right. It's a marathon, not a sprint. Buffett is famous for his long-term strategy. He doesn't panic when the market dips. In fact, he welcomes it because that's when opportunities arise. Imagine buying a stock at a 30% discount. Who wouldn't want that? But the problem? Most investors are swayed by the day-to-day noise. Stock prices fluctuate and it can feel like a roller coaster ride. Exciting, but also terrifying. Here's the catch. If you can stomach the ride and stay patient, your wealth will grow over time. Now, I can almost hear your thoughts. But how do I know what to hold on to for the long term? Great question, and I've got a killer tip coming up. Point 3. The moat. Look for companies with competitive advantages. Now, here's where it gets really interesting. One of Buffett's most powerful principles is investing in businesses with a moat. Think about a castle with a moat around it. What's inside is protected. In business, the moat represents a company's competitive advantage. It could be anything from brand loyalty, patents, cost leadership, to network effects. This is the secret sauce to choosing companies that will thrive year after year. Take Apple, for example. It's not just the shiny devices, it's the ecosystem, the brand, and the loyalty they've built over decades. That's a moat. Without a moat, a business is vulnerable to competitors swooping in. With one, you've got a business that can weather storms and come out stronger. So, the next time you're looking at a potential stock pick, ask yourself, does this company have a moat? What makes it untouchable? That's the golden question. But here's the kicker. There's another key factor that you must consider if you're going to pick the next Buffett-like winner. Point 4. Focus on management and leadership. You can have the best business idea in the world, but without solid leadership, it's a sinking ship. Buffett always says, when a manager with a reputation for brilliance meets a business with a reputation for poor fundamentals, it is the reputation of the business that remains intact. What does that mean? Great leadership can turn an average company into a great one. So, what do you need to look for in management? Track record, integrity, vision, and ability to adapt. Take a deep dive into the leadership team behind your potential investments. Are they passionate about the company's mission? Are they transparent with investors? Do they have a history of handling tough situations with grace? I promise you, this could be the game changer that sets you apart from other investors. But there's one last critical piece to the puzzle, and you won't want to miss it. Point 5. Stick to what you know. Last but not least, stick to what you know. Buffett made billions by sticking to industries he understood. He never chased tech stocks or trendy sectors just because everyone else was doing it. Instead, he focused on sectors where he had an edge. Think about it this way. If you're not an expert in tech, do you really want to bet your money on a company that's at the forefront of AI or quantum computing? Probably not, but maybe you understand consumer goods, retail, or even finance. The key here is not to spread yourself thin. You don't need to pick stocks in every industry. Instead, focus on what you're passionate about and where you can build expertise. This is how Buffett does it, and how you can too. So there you have it. You now know how to pick stocks like Warren Buffett. It's all about understanding the business, thinking long-term, finding that competitive advantage, analyzing leadership, and focusing on what you know. But here's the million-dollar question. Will you take action today? Or will you wait another year, another month, another day, and risk missing out on opportunities that could change your financial future? Let me know in the comments. What's the first stock you're going to research using Buffett's strategy? And if you found this video helpful, hit that like button and subscribe for more tips on building wealth, making smart investments, and living the life you deserve. Remember, your financial future starts now.